So you've recently got into currency trading but you don't know where to start. So in this video I am going to try simplify things for you to take in. I'm going to refine it as much as possible so it's easy for you to understand and hopefully apply it to the charts in no time. We're going to talk about things like market structure, liquidity sweeps and everything like that. But before we get into all of that, my name is Derek Bathgate and I have been currency trading for around 3 to 4 years now. And throughout this time I have went through absolutely every mentorship, every YouTube tutorial, every one-to-one Discord section imaginable, and throughout that time I have learned all different strategies, things that do work, things that don't work, and I have refined my strategy down to I know exactly when I'm going to enter, when I'm exiting, what market conditions I need to see to get into the trades, but all of that we will get into later. And if anything that we talk about you're confused about, you need to ask some questions, I have a completely free Discord that is A to Z on how I trade, specifically to me, and it's not one of the Discords where you join, you need to pay when you get in. No, it's completely free and I am available to answer any sort of questions about anything we go over whenever you need. But let's get into the video. So, the first thing that we're going to start off with is market structure. Just say we are in an uptrend. We are putting in higher highs. This high is higher than that high, so that would be our new higher high. And then this high is higher than that high, so that will be our new higher high. But for higher lows, it is the exact same theory. So this is our first higher low. We then have our second higher low after the higher high. Once this high gets taken, that will be our new higher low. And so price continues bullish until the chain ends up breaking. And so for a downtrend example, we are putting in lower price action, bearish price action. Here, we have our lower high, as that high is lower than that high. Once price breaks structure, we then have another lower high, and then it continues. We also have our lower lows. Price breaks structure, pulls back, breaks again, creates a further lower low. For the next section, we're going to talk about break of structures. I'm going to mark it again. Here, we have our lower high, another lower high, a lower low, and a further lower low. But when price breaks past this lower low, price then breaks structure. Price then pulls back into that leg, then breaks structure again. In an uptrend example, we have our higher high, a new higher high. After the break of structure, we have our higher lows. These lows are what broke structure, the area that caused the break. But here's when it gets confusing. When price is moving bearish, but instead of holding this area and then continuing lower, price then breaks the high, pulls back, breaks the next again high, and then continues bullish. Here, this will be considered our change of character. So for this example, say sellers are in control, which you can see here. They are putting in further lower price action. But then all of a sudden, there is more buyers than sellers, and that causes a break of structure in the opposite direction to where price starts trending bullish, creating new higher highs. And it is the same with bullish price action. Price gets exhausted, sellers become in control, takes the low, and then continues bearish, breaking structure along the way. So the next section is liquidity. Here, we are trending bullish, but price comes down, takes liquidity, takes this low, but doesn't break fully with a candle, and then continues higher. That is what you call a liquidity sweep. The liquidity sweep is practically the area where buyers and sellers enter, but when sellers are in control, price rallies down, takes out buyers' liquidity, and then continues in its designated direction. But we also have internal range liquidity, where we're moving in our designated bullish direction. Price breaks structure, comes back down within the same leg, sweeps liquidity, and continues higher. This liquidity sweep gives us the fuel to continue higher. But if we put it all together, say we are in a downtrend, price is continuing lower, building internal range liquidity, we are still breaking bearish structure. Price then takes the most recent high, takes it as liquidity, and then continues lower. We are still in a downtrend. Price decides that it wants to come up and take the high, and that changes our direction to bullish. We are continuously having bullish breaks of structure, and we had our choch. Price swept the low and broke the high, changing structure to bullish. But I hope you enjoyed this video. I know there's a lot to grasp. This is solely just the basics of market structure and liquidity. If you do want to learn more, I am going to be uploading many more videos, so if you're interested, stick around and I will catch you in the next video.